Tesla's down 3% today and hit our $350 target. And, obviously I'm a bit happy about this. I did not short Tesla. I haven't really traded. You'll see we haven't really traded Tesla much at all since November. The bulk of the returns that we made was from that breakout in June up until the end of November, early December. The reason for this was because of the BX Trender, which is the indicator showing buy sell pressure at the bottom of your screen. What we want to see is a breakout and this indicator showing higher highs. This is telling us that buyers are stepping in at an institutional level and that we're pushing price up. This is very important because people like you and me do not move the market at all. And so what we need is the participants who can move the market in the market with us at that time. And in most cases, much like we saw at the end of December here on your screen, when we make a lower high, this is the first signal that those participants are leaving the market. And when they leave the market, the only people who are left there is retail. And what did we just say? Retail doesn't have enough money or purchasing power to push the stock higher. Which means the next time that the stock is going to get pushed higher is once again when those big participants such as hedge funds, whales, institutions, once they start entering, that is when we look to go long again. Now, if we zoom out here on the weekly chart, you're going to see that we finally broke that massive downtrend that we had for nearly 2 years back in June. You'll notice that this massive run here correlates perfectly with our returns. Now, the reason for that is what we are looking to do with our strategy is to focus on trend reversals, which happens back here. We have all of this buying pressure, which you can see here for multiple months. And when all of these participants are entering the market, but we're looking like we're going to reject, that is a pretty damn clear indication that we are not going to reject. And that instead we're going to break out. And that's why we were very bullish on this. And we saw and called out a 50% move within 28 days. And obviously this is right here where we ended up capturing that move. I started removing a lot of my call options on the week of the 22nd because the BX began to make a higher low. And remember, that is an indication that participants are leaving the market. But here's the deal. When we are in a downtrend, we are making lower highs and lower lows. But when we are in an uptrend, we are actually making higher lows and higher highs. This is important because I don't want to be buying in a premium market. I only want to be buying within a discounted range. And so this market bias tool shows us the discounted ranges that we should be buying, indicated with this green line. This is why we sold most of our calls here and reloaded back here in August for that next breakout to higher highs. As price pulls back, we load up once again, and that's why we were focusing on this massive breakout over the past 6 months. But as of the beginning of January, we saw buying pressure on the weekly chart leaving the market, and when that happens, we know price is probably going to pull back to the market bias. This is why last week I was calling for the break of this liquidity level because we have macro buying pressure leaving Tesla still. Price was making lower highs, which is not a sign of strength. See, a lot of people see this support and they think that it's strength. They think to themselves that because that level has held, that it's going to hold again. But you shouldn't care about that. What you should care about is actually these highs because yes, price is holding that low, but every single bounce, every single opportunity is showing weakness. It is not making higher highs and it never shows strength, not once. And that's why it's been so easy for me to remain patient because I don't care what's happening as far as demand for Tesla. I don't care about anything fundamentally. I care about what these institutions are doing because they're not watching the news. They don't care about what's in the headlines. That doesn't matter to them. And that's why it doesn't matter to me. And so now that Tesla is pulling back into this market bias, it means that we are in a discounted range. But once again, we're going to use patience and we are not just going to buy for the sake of a discount. We are only going to buy when they show some sign that the bottom is in. Now, what I teach within my private academy and my Discord community is that as we're pulling into these market biases on the bigger time frames, we need to go down to a smaller time frame, such as a daily chart, and look for the very first sign of a bottom. And in most cases, the very first sign of a bottom inside of that market bias, right up here, we're not in that area. Now that we're near 350, 340, this is where it piques our attention. As soon as this BX stops making lower lows and starts to show even one higher low, then I will go into Tesla with probably 20% of my total planned position size. So let's say I want to go in with $100,000. I will only buy $20,000 worth. From there, I would set a stop loss down at about $312 or a clean break of the weekly market bias. Let's say that price ends up bouncing and I get filled and it just for some reason runs to all-time highs. Cool. At least I'm in the trade. I have $20,000 worth of calls and I'm playing the upside at some point. Is it as strong or as aggressive as I want? Definitely not. But I have some upside and some skin in the game. Now, if price continues to sell off once/if it shows another sign of higher lows, that's where I will average down. And then the same thing, if it sells off again and bounces before the stop loss and shows another sign of strength, I'll average in with the rest, which should give me a pretty good average somewhere around here, which is the lowest area on the market bias. And so in a best case scenario, price bounces, we push right up into higher highs. That is 61% in the next 90 to 120 days. And if you end up stopping out, you lose anywhere between 6 to 10%. This is anywhere between a 10 to 1 RVR to a 5 to 1 RVR, which is crazy because you could have a 50% win rate, basically a flip of a coin, and still make bank because of your RVR. Now let's talk about worst case, right? If that price ends up breaking, if the weekly market bias ends up breaking, where do we go from there? Well, the reason I would stop out at 310 is because if we zoom out to the monthly, that would mean that the monthly BX closes with a lower high. That is not good at all. If that occurs, then there is about an 80% chance that price would pull all the way back down to about $260 to $250. And in that case, I would not be touching Tesla for a very long time. If you want to learn my strategy for free, go ahead and check out all of our courses down in the description. We have over 11 teaching everything that I know about trading in my past 9 years. All of those courses are free. I'm not one of those people who's going to safeguard information behind a paywall. But if you are somebody who's been trading for at least a year or two and you're looking to up your game, go ahead and check out our private Discord community. You get access to our Discord, all of our trading bots, all of our real-time alerts, as well as weekly live streams and daily video recaps of all the trades we took that day. Thank you guys for all the support. I hope you have a great day. I'll see you next time.